Okay, the next topic is income inequality and inflation. First is define the term income inequality. Income inequality and income disparity segregations can be analyzed through a variety of segmentations, and segmentations of income disparity are used for analyzing different types of income distributions and income distributions by the demographic segmentation from the basis studying income equality and income disparity. Basically the we can see the very segmentation is very separate. Very sector means there are many organizations in which they cannot provide the actual salary to the employees, those who actually deserve. If the employee do overwork, then the employee do not get the salary in the country of India. But these thing not happen in the USA and Australia. So in this way, they do biasness. So we need to distribute the equal money to all the candidates, give which work for the which put 100% effort toward the organization. We need to analyze this term. First, there are some causes of income inequality. First is failure of labor-intensive manufacturing in India. Means in the manufacturing sector, the labor-intensive will be failure. Jobless growth in India. Means there are many people who are jobless. Some people does not have skill. Lack of skill development means individual do not need to develop your skills. Failure of develop export-oriented industry means they are failed to develop the export industry in the nation. Rigid social institutions like caste means they are only means we do bias on the basis of caste. There are only few institutions on the basis of caste. We do not provide facility to the clients. Cities fail to producing job for poor migrants. Urban cities do not provide job to the poor people who migrate from the rural areas or migrate from the another states. Regional and interstate inequalities means they are also inter between two states, regional and interstate. So we need to overcome these issues. Then the people get then we will become income equality among the people. We distribute the actual money to the for we do there. I will discuss the further points which overcome these issues in the next slide. How to reduce income inequalities? First point is promotion of labor-intensive manufacturing. Those people who are working in the construction, textile, clothing, footwear industries, and it is single most reason for rising inequalities. Basically, if organization there will be obvious inequalities are arising, but we need to. The labor-intensive manufacturing has the potential to absorb millions of people who are leaving farming. Means they can easily hire those people who leave the farming. They will provide jobs in this way. Each and every individual get job and they live a good lifestyle and fulfill the basic necessities of lifestyle. More inclusive growth. The promotion and adoption of inclusive growth agenda is the only solution to rising inequality problem. How inequality problem will be rising? When the someone is promoting or when we have to adopting some new strategy. So in this way, inequality will be rise. We are unable to give the equal salary to all the employees. So economic growth, which is not inclusive, will only exacerbate inequality. If economic value will be growing day by day, definitely we can reduce this problem from the nation. Next, skill development. The development of advanced skill among the youth is prerequisite of if India wants to make use of its demographic dividend. If we want our youth will get quality education, they have knowledge about the recent technologies which are if we adopt the technology, if nobody has knowledge, then how we can utilize this machine? So the skills of youth by increasing investment in the education is the only way we can reduce inequality. India needs to become a skill-led economy. how we can reduce, how we can generate skill development among nations. In this term, it is a duty of education. They need to develop the skills among the youth. They provide proper training. So they will get qualification. Then they know. Then they uh, they improve the skills while they are studying in the college or numerous institutions. Next, progressive taxation. Higher taxes on the rich and the luxurious will help reduce income inequality. If rich people pay higher tax to the government, in this way it can also reduce the income inequality in the nation. Next point is equal opportunity for all. The government may devise and set up some sort of machinery which may provide equal opportunity to all rich and poor people in getting employment or getting a start or trading industry. Means we have to give to charge each and every person in the nation. If the people is rich, if the people is poor, it doesn't matter. We give jobs to each and every category of the people, so they can also start the industry and do something for the nation as well as for themselves. In other words, something may be done to eliminate the family interest in the matter of choice of a profession. Sometimes, if family interact or maybe influence you, you do not choose this field. So, in this way, due to this thing, our mind will be washed, and we have to indulge in another things. For example, the government may institute a system of a liberal stipends and scholarships so that even the poorest in the land can acquire the highest education and technical skills. For example, if if there is any government institute, they provide a stipend. Stipend means when the children go on training, and if they perform very well, the company will give you stipend like 1,000 and 2,000. It depends upon your performance, how you perform. While in the training time, you will earn income. Scholarship means if you score very good marks, if you clear the test, then you will get a scholarship around 50,000, 25,000. So in this way, poorest people can also acquire the highest education and technical skills in the institute. Next is Next point is inflation. Next topic is inflation. According to Kiwis, inflation is an imbalance between the aggregate demand and aggregate supply of goods and services. Therefore, if the aggregate demand exceeds the aggregate supply, then the prices keep rising. For example, if as we know that every person fulfill the basic requirements, some people for example, new machines come in the market, and it is very useful for the women. For example, washing machine. So everybody want to buy this machine, this technology, because the work will be easy. So in this way, demand of this product will be increasing. If demand will be increasing, maybe the company will hike the price due to more supply of the particular product in the nation. So in this way, the price inflation, it happens in the nation. Which product is used most and used by each and every human being in the country. This is inflation. There are some causes of inflation: primary cause, increase in public spending, deficient financial government spending, increased velocity of circulation, population growth, clothing, general shortage, export, trade union tax reduction, the imposition of indirect taxes, and price rise in the international markets. These are some causes. Now we will discuss one by one. First point is primary causes. In an economy, when the demand for a commodity exceeds its supply, then excess demand pushes the price up. On the other hand, when the factor price increases, the cost of production rises too. This leads to an increase in price level as well as. Same example which I explain you. The first is if the demand is more, then supply is more, and the prices are automatic increase of the particular product. Second point is increase in public spending. In any modern economy, government spending is an important element of the total spending. Means government spend the money on the public. It is also an important determinant of aggregate demand. Again, this is the important determinant of depends on the aggregate demand. Usually, in a lesser developed economy, the government spending increasing, which variably creates inflationary pressure on the economy. If the demand is more, then it will directly have pressure on the government. How they control this thing in the nation? Because they need to invest more on this technology. Next part is deficit financing of government spending. There are times when the spending of government increases beyond what taxation can finance. Because whatever, if what money they have generate to tax, sometimes the government finance will be reduced when they spend extra money on in the nation. So the government come also in the deficit position. For example, it prints more money and spend it, and then in turn add to inflationary pressure. Means if government print more money and spend in the nation, automatically the pressure is more and the price will be high. The next one is increased velocity of circulation in economy. The total use of money equals to money supplied by the government multiplied by the velocity of circulation. How we can calculate this is first where we have to use the total money equal to how many money we have to supply by the government, and in this way we calculate the velocity of circulation. When this method is applied, when an economy is going through booming phase, people tend to spend money at a faster rate, increasing the velocity of circulation over time. Means when the human being ready to invest money in the nation at a very faster rate, then the circulation of money will be, it means the velocity of circulation of money will be increased a lot with the help of, because individual comes forward and they want to do something for the nation, they want to invest money in the nation. Next is population growth. As the population grows, it increases total demand in the market. For the excessive demand creates inflation. Again, if population increase, demand will be increased, and excessive demand create the inflation in the nation. Next point is hoarding. Hoarders are people or entities who stockpile commodities, do not release them to the market. Means they have to maintain the stocks and maintain the commodities in the store. Therefore, there is an artificially created demand, excess in the economy. This also leads to inflation. If they continuously supply the product, then they need to control it. So in this also need to create the inflation, leads to inflation. Next part is genuine shortage. It is possible that at certain times the factor of production are short in supply. Sometimes our supply will be short. This affects the production. If we do less supply, the automatically the production will be reduced. Supply is then less than the demand, leading to increase in price and inflation. Means if the supply is less, then also the price of the product is increasing, and it gives birth to inflation. If demand is more, if supply is less, in both cases the prices are rising. The next point is export. In an economy, the total production the total production must fulfill the domestic as well as foreign demand. Means our production will fulfill their domestic requirement, also foreign demand. If it fails to meet this demand, then export create inflation in the domestic economy. Then this term will create the inflation in the domestic economy. Next one is trade union. Trade union means every organization there are some for it is a group of people who claim the rights to the organ. For example, there is an organization of 50 people, and the five people are leaders of different departments. Then, if the manager do not give you exact salary, then they discuss the matter with the team leaders, and team leaders forward this matter to the manager. So trade unions solve the problem of the workers in the organization. They are favor of the employees. Trade union work in favor of employees. As the prices increase, these unions demand an increase in wages for workers. If the particular price of the product will be increased, then they demand to the manager, they want their salaries will also be increased. This invariably increases the cost of production. With the help of this, cost of production will be increased and leads to further increase in prices, and prices will be increased. Because also organizations also pay salary to the workers, those who are work for the nation, for the company. Next one, tax reduction. While taxes are known to increase with time, taxes are vary according to time. Sometimes government reduces the taxes to gain the popularity among people. It depends. Sometimes government reduce tax as they want people trust on the government, and the people are happy because they have more money in their hands. So people are happy because they do not need to pay high tax to the government. If the rate of production does not increase with the corresponding rate, then excess cash in hands lead to the inflation. If the rate of production does not increase, and then the excess whatever the money have the organization, it leads to inflation. Means they want to invest another thing, again the higher prices of the product and then supplying the market. Next one is the imposition of direct taxes. Taxes are primary source of revenue for the government. Basically, with the form of taxes, government generate the income, and sometimes government impose indirect taxes like excise duty, VAT, and etc. on the business. Means businessmen also pay the VAT and also pay the excise duty to the government. As the indirect taxes increase the total cost of the manufacturers, sellers, they increase the price of the product, they have minimal impact on the profits. Means of those people who are running organizations, they also need to pay indirect tax to the government. So if they pay high tax, then also they need to increase the price of the product. So which have minimal impact on the profits. Price rise in the international markets. Some products require to import commodity or factors of production from the international markets like the United States. Some product we have to buy from the international countries. So if these markets increase the price of the commodities, then the overall production cost in India increases too. This leads to inflation in the domestic market. Obvious, if we import something from the USA, Canada, Australia, if they increase the price of the goods, then it has directly effect on the country, India country. They also need to sell the product in the higher price, so which automatically increase the inflation in the nation. Next point is non-economic reasons. There are several non-economic factors which can cause inflation in the economy. For example, if there is flood, crops are destroyed, supply of agriculture products leading to increase in the price of the commodities. If there's something happening in the future, maybe due to the economic reason, inflation is also occur. Next, investment in gold, real estate, stocks, mutual funds, other assets are some of the ways to deal with inflation. These all terms are relating to the inflation. Thank you.